Good morning, everyone. Welcome to our webinar. I'll just give it 1 minute and wait for everyone to come in, and then we'll get started. Okay, so before I get into the content this morning, welcome to our sector spotlight on materials and mining. It's technically the second one in our sector spotlight series, and we'll be having a number of these coming up, all about different sectors. So from materials and mining to finance, payments, healthcare and consumer products as well. So definitely check out all of our webinar emails for the upcoming sector spotlights as well. Today I've got Hayley joining in from our customer success team in the chat. She'll be helping me to just manage the chat as we go. But if you do have any specific questions throughout the webinar, please pop those in the Q&A function, because we will have a little bit of time for some Q&A at the end. Otherwise, feel free to jump in the chat, make some comments as we're going. Let us know where you're joining in from. And I'll share my screen. Just give me a moment and we will get started. So just a reminder that Superhero does not provide financial advice. It considers your personal objectives, financial situation, or particular needs, and all investments carry risk. So please consider carefully before investing. Past performance is not indicative of future performance, and any pictures, graphics, charts, and graphs are provided for illustrative purposes only. We will be looking at some numbers today, so just keep in mind that this is past performance and is not indicative of any future performance as well. All right, I've mentioned this, but just a reminder that we'll be going through a sector spotlight series over the next couple of months. And a sector is essentially a group of stocks that have a lot in common with each other, usually because they're in similar industries. And there's a global industry classification standard that actually defines 11 different stock market sectors. And you can see those on the right there. So we'll be kind of going through each one of those as we go. And we categorize stocks into sectors to make it easy to compare companies that have similar business models. So it can make it easier when you're comparing certain investments as well. All right, so today we're talking all about the materials sector. So what do we mean by materials? So the basic materials sector is made up of companies involved in the discovery, extraction, and processing of raw materials. So that includes things like mining, forestry, and chemical production. And look, all physical goods are made up of a combination of basic materials that are then processed in order to create a finished product. And the example that we have below in the graphic there is toy production. So what you can see highlighted in orange is those basic materials that are used. So we're talking about companies today that are involved in that first stage of material production and discovery, and then the toy would move through to production. And that's where you get into more of the consumer product, retail, maybe e-commerce type of stocks. So today we're looking at that first step in the process. And when it comes to the index, or the group of stocks that are involved in this sector, on the ASX, there's actually an index called the S&P ASX 200 Materials Index, or XMJ is the code there. And the graphic you can see there on the right is a market index page. So market index is a website, and it shows you kind of all of the stocks involved in these different indexes. So this index contains the 39 companies in the ASX 200 that are classified as part of that materials global sector standard. So it's rebalanced quarterly, and all of the companies involved are involved in commodities and related industries. So again, mining, forest products, and construction materials. And many of the materials that basic materials companies produce are considered commodities. And a commodity is a good that trades on a standardized price. So when you think about things like gold, iron ore, it's less so a company price, although there are definitely company metrics that come into a stock price. but the material itself is often traded on a standardized price. So when you might hear things about the price of gold or the price of petrol or the price of oil, that's kind of how we classify a commodity. And when it comes to mining globally, we just looked at the ASX, but the countries that are the biggest miners in the world, you can see there China is number one in terms of the extraction of mining products. Again, this graph is from 2018, but China really are winning the game there. Followed by the US, we've got Russia, Australia, India, and the list goes on. Now, when we think about Australia and compared to population size, you can see there that Australia really over indexes in terms of the mining sector. So, some of the companies there have really big populations, big countries, but Australia, in terms of population size, really does, we're resource rich. Australia is rich in things like uranium, gold, iron ore, copper, lithium, and nickel. So we actually, even though China is a huge, extractor of a lot of minerals, Australia, you can see in the graph there, we really have a lot of iron ore extraction that happens. So you can see that nearly about half of our extraction comes from iron ore. So we're a big exporter of iron ore to countries like China, where you can see they're a huge overall extractor, but less so on the iron ore side of things, which is used in a lot of construction. So depending on the material as well, that's where things like export definitely come into play. And when we look at a country like the United States, gold, silver, and copper are the main mineral resources that they extract. And there's obviously a lot of growing interest in the battery mineral space, which we'll go through in detail today as well. Okay, when we look at some of the biggest global mining companies, you can see there the top two are actually companies that are listed in Australia. Now, both BHP and Rio Tinto are not only listed in Australia, so you can actually buy these companies on multiple stock exchanges, but both of these are listed on the ASX. So BHP and Rio Tinto, they're really, much bigger than even the third biggest mining company as well. But you can see there the UK, we've got China, Canada, South Africa, Russia. So those countries that are the biggest extractors there. And moving on, so we've spoken a little bit about the companies that are involved in the different indexes. When it comes to the actual metals and materials that are being mined across the world, this graph just gives you a really good overview of the sheer volume in tons that is being extracted. So, on the left there, you can see iron ore. It is by far the biggest. So in 2019, made up 94% of the total of 3.2 billion tons of metals that were mined in 2019. Just a huge market for iron ore there. Then you can see the more industrial metals, so aluminium and copper were quite big there, manganese as well. These are, again, used in a lot of construction. Aluminium, it says there, the second most used metal after iron, found in everything from electronic devices to aircraft parts. So just a huge breadth of use cases for these bigger metals. And then look on the right, we start to move into tech and precious metals. And look, there's a range of different metals that are listed there. One I'll draw attention to purely because it's been kind of spoken about a lot over the past couple of years is lithium. So you can see there, when you compare it to iron ore, lithium's all the way down there at 97.5 thousand tons. But that area is definitely a growing area in terms of the use cases there. Lithium being driven heavily by the adoption of electronic vehicles and lithium being used in the batteries for those vehicles. So, big demand there, along with a number of other precious metals like copper increasing definitely as well, and nickel, and the whole list that you can see there on the screen. Okay, so we know that iron ore is the biggest in terms of extraction, but what this graph really shows then is how the price of each of these metals has performed. And this graph is from 2021. So just keep in mind that this was the 2021 price, so not necessarily reflective of today's prices, but just shows a bit of an overview of where demand for a certain metal has really, really skyrocketed over the past couple of years due to those new use cases that are popping up. And we'll go into a little bit around renewables and kind of how that's grown as well in a bit. But yeah, you can see there, lithium, huge demand spike as demand for electric vehicles has boomed. So yeah, prices for battery metals like lithium and cobalt have really gone up as that demand has just exploded. And then moving down, you can see there that kind of more of those tech metals that are being used in new tech have gone up in the past couple of years. And then we've got things like precious metals, so gold, silver, and iron ore haven't performed as well in the past couple of years. But something like gold has been used for decades in terms of a stable investment where the price doesn't fluctuate as much as something like lithium, which is a newer, much more exploratory metal that a lot of companies are getting into. And just to look at some of the limitations to mining globally. So we've seen which countries are, the biggest extractors, but it's important to have a look at mining is a very global industry. So you've got companies that may be based in Australia, but may actually have a lot of their production overseas. And we'll go through where some of the Australian companies are focusing their mineral exploration globally. But countries like China, Russia, Kazakhstan, and Venezuela all have vast natural resources, but their political climates can make it difficult for foreign entities to actually enter to explore those resources as well. So in countries like Venezuela and China and Russia, mining is completely state controlled. So the government has kind of control over all of the resources. Countries like Kazakhstan is largely closed to foreign investment. So for an Australian company to go and try and set up mining exploration there would be quite difficult. And then countries like Brazil, Argentina, Congo, and South Africa are home to some of the world's largest ore deposits. But again, companies really do need to consider the geopolitical climate if they're looking to set up operations in those countries. Okay, so renewable energy. The deployment of renewables and electric vehicles is expected to increase. And we know that, I don't know about you, but I've definitely been seeing some more Teslas driving around. And that's happening increasing as the world is really trying to reduce those greenhouse gas emissions. So a lot of countries have signed up to their carbon targets and really looking to adopt these low carbon technologies. And these low carbon technologies currently rely on a handful of key metals, some of which are very new to market and have been little used to date. So look, there's huge opportunity in this space. The image on the right just shows you kind of for each different type of renewable energy or renewable technology, what are some of the metals and materials that are used in that kind of technology. And this webinar will be going up on YouTube after today. So if you don't get to see where all the crosses are, don't worry. It'll be on YouTube and you can pause and have a look and do your own research there as well. But look, when it comes to the risks of some of these explosions in the renewable space, look, whether there's enough of these materials that can be mined to keep up with large scale rollouts and demand. And there's also, a question around environmental impact of mining these metals. So great that these metals themselves are renewable, but how are we looking at the mining practices as well, and whether those are ethical in themselves as opposed to just looking at the metal. Because looking at, I guess, the balance of carbon emissions there as well. So just something to consider. And what are some of these metals? Just to take a bit of a closer look into some of these metals that are being used for low carbon technologies. The first one, I'm sure you've all heard of it in the media of late, but lithium. So lithium is a soft silvery white metal, which is also the lightest in the periodic table. And it's a crucial ingredient of lithium ion batteries. And the lithium ion battery is the battery of choice for most car makers that are creating electric vehicles. So, Tesla, BMW, Ford, Nissan, all of these companies going into the EV space, definitely, big users of the lithium ion battery. And if you're wanting to know some ASX companies with exposure to lithium, the likes of Pilbara Minerals, AllChem, Liontown Resources, and Sayona Mining all have exposure. Again, that is not a comprehensive list at all. So definitely do your own research there, but just a few that do have exposure. And then nickel. So nickel is another ingredient needed for batteries, and it's expected to form an ever larger proportion of future batteries. So nickel's kind of already used elsewhere. So in stainless steel production, and the mines are distributed among many different countries. So while lithium, there's a little bit more concern over the supply versus, the supply being less than demand there. There is less concern over the supply of nickel, but the demand is definitely expected to grow in the next couple of years as well. So some ASX companies with exposure to nickel include South32, Oz Minerals, Nickel Industries Limited, and Panoramic Resources Limited as well. Again, make sure you do your own research as to the difference between these different companies. When we talk about mining, it's really broad, and some companies might be very concentrated on one metal or mineral, and others may have kind of vast multi-mineral explorations as well. So they're definitely not like for like just because a company has exposure to one metal. It's important to look at the company overall. And a great resource that I often use for looking at these commodities is Market Index. So look, the Superhero app, you can also go on, and we've got a materials and mining category. Sorry, lost my words there for a second. So you can go and click in and see some of these minerals and mining companies. We've got a lithium focused one there as well. But if you want to see kind of a list of every single or the main commodities available, Market Index is a great resource to go and compare performance. You can compare prices. And you can do that across a range of different commodities, metals, minerals. So I've used an example here of hydrogen. It's really great, gives a little overview of what the metal is or the mineral is as well, what it's used for, and then you can see all of the companies listed on the ASX that have exposure to that commodity. And you can see there at the top bar, you can do a drop down and have a look at all of the commodities that they kind of show you as well. All right. So let's jump into a bit of a spotlight on a couple of ASX metals and mining companies. The first one, and one of the biggest ones, is Fortescue. So Fortescue Metals Group engages in the exploration, development, production, processing, and sales. So involved in the whole process there of iron ore in Australia, China, and internationally. So very local, kind of big local presence, big export presence to China as well, and internationally too. And it also explores for copper and gold. So not only iron ore, but definitely kind of getting into some of these other minerals as well. The company was founded and is headquartered in Perth, but like I spoke about, Australian-based companies also have a lot of operations overseas. So for Fortescue, they've got properties in Ecuador and Argentina as well. And look, when we look at the performance here, Fortescue is a company that's been around for nearly 20 years. So we've seen quite a high dividend yield in the past year. Now, that again is past, but Fortescue is definitely seen as one of those kind of key income stocks. So investors looking for that regular income, Fortescue is one that does pay a dividend or a percentage of profits back to shareholders. It's got quite a low PE ratio compared to some of the more exploratory newer stocks and materials stocks as well. So that PE ratio is that price to earnings ratio. So the share price compared to the profits of the company, it's got quite a low ratio there. And the performance in the last year has been 8%. the positive side, and on a 5-year horizon as well. So past 5 years, it's done quite well. And the entire kind of materials mining sector has done quite well in that time. Again, there's been a range of, company factors that have influenced that, but also macroeconomic factors, or those factors that aren't specific to one company, but are really kind of a geopolitical macroeconomic. So what's going on in the world, essentially, that has impacted the prices of certain commodities and therefore, impacted the revenues and profits of these companies as well. So moving on to more of a specialized newer company, we've got AllChem. So AllChem is a specialty lithium chemicals company, and it's actually headquartered in Argentina, despite being listed on the ASX. So again, not all companies are alike. It's important to really look into the company, where it's based, what different factors geopolitically might be affecting that company as well. Just because something's listed on the ASX doesn't necessarily mean it is based in Australia or headquartered in Australia. But yeah, its operations are located in Argentina for brine and borate, and the expansion of brine production is underway in that region. But they do also have assets in Western Australia. They've got a hydroxide plant in Japan and a hard rock project in Canada. So really, really a global company there, where they're looking at exploration of lithium chemicals. Now, AllChem, you'll see a bit of a different company in terms of some of its numbers. So it hasn't had a dividend yield in the past 12 months, which means that the company hasn't paid back its profits in the form of a dividend to shareholders. What that usually means is the company is using any profits it's making to reinvest into the growth of the company. So because it is kind of more of an exploratory company, it's really trying to expand its operations. It's using any profits to go back into growing the company. And in terms of pricing, you can see there that in the last year, it's grown, and this is from about a week ago, so just keep that in mind. Kind of mid-September, but it had grown 66% year on year and 259% in the past 5 years. And again, a mix of micro and macroeconomic factors there affecting the pricing of lithium, and therefore the pricing of this company as well. And to compare to lithium stocks, we had AllChem. Core Lithium is another lithium-focused stock on the ASX. And Core Lithium engages in the exploration for lithium and base metals in the Northern Territory and South Australia. So a little bit more Australian focused. And the company primarily explores for copper, gold, iron, silver, uranium, lead, and zinc deposits. So not only lithium there, even though it's called Core Lithium, again, sometimes names don't necessarily match up to exactly what the company does. So yeah, it doesn't only have lithium production, but it's also exploring for a range of different metals and materials. And yeah, it's looking into its Finniss lithium project located to the south of Darwin in the Northern Territory. And Core Lithium was incorporated in 2010 and its base is in Adelaide. So 2010, it's been around for about 12 years, quick maths there. And look, similar to AllChem in the sense that it hasn't had a dividend yield in the past year. Its PE ratio there is a bit different. So it, from a profit perspective, hasn't been making the profits that AllChem has, but it's very much been focused on growth. And you can see there that the pricing of the share really does reflect that. So you can see it's a bit more of a volatile stock. It's seen some rapid growth, but look, the profits aren't there yet because it is very much at its early stages and at the stage of rapid growth. So yeah, again, two lithium stocks, different stages, different kind of company makeups in terms of what they focus on, whether that be where their deposits are, where they're exploring, or what metals they're exploring as well. So again, always important to look behind the numbers and see what's actually happening in terms of the company's makeup. Now, you might be thinking, there's a lot of different companies. Which one do I pick? And I can't tell you, unfortunately. We all wish that we had someone that could help us pick our stocks. But if you wanted to buy into the resources market as a whole, instead of kind of going in and researching individual companies and picking an individual company to invest in, there are a range of ETFs that also kind of give you exposure to the total resources sector. So one example here is the BetaShares Australian Resources Sector ETF, or QRE is the stock code if you're looking to search it. And QRE aims to track the performance of an index which comprises the largest ASX listed companies in the resources sector. So we spoke about at the beginning of the webinar, that XMJ index, or the S&P ASX 200 resources sector. So if you want kind of an ETF that targets companies in that index, that's where something like the BetaShares ETF that's seen here could come into play. So if you're wanting to invest more broadly in the sector, you can see on the right there, this is what the ETF holds. So the underlying holdings, BHP is the biggest holding. So you've got 35% exposure to BHP, Woodside Energy, Rio Tinto, Fortescue. So some of the really big ones, but then you can also see it's got some of those more newer growth stocks as well. So Newcrest Mining, Pilbara Minerals. So a mix there of the big guys and some of the more growth focused or newer stocks as well. And it gives a good sector allocation there. This is from the BetaShares website, by the way. So on the Superhero app, you'll be able to see some of the top holdings and key information. But if you want a full sector allocation and full holdings breakdown, always make sure to check the ETF provider's website, and you'll have full fact sheets, performance, really everything you need to look at when it comes to ETFs. But you can see there, kind of metals and mining is the biggest sector that it invests in. And this is kind of like a sector within a sector, if you think about it that way. Oil and gas exploration, and then you can see some of the commodities there as well. And in terms of ETF kind of numbers, the management fee is 0.34%. And when it comes to ETFs, it's always important to look at the management fee that's involved. The management fee is not something you'll have to pay from your wallet or from your cash, but it's kind of included in the overall balance of performance that you'll see. So yeah, always one to remember. It has paid a dividend yield. So with ETFs, as opposed to getting the dividend yield of one company, you'll get the dividend yield kind of across the total ETF holdings, if that makes sense. So if you've got 35% of BHP, you'll get that portion of BHP's dividend, and it will work out, a total dividend for you. And then you can see there some of the P ratios and performance that have happened in the past year and 5 years. And just to compare that to a US-based ETF, this one is the iShares US Basic Materials ETF. So it gives exposure to or seeks to track the investment results of an index composed of US listed equities in the basic materials sector. So the other ETF was the Australian resources sector, and this ETF is listed on the US stock market and gives you exposure to US listed companies in the materials sector. So both of these you can buy on your Superhero app. With US, you'll need to transfer from Australian to US dollars in order to buy this ETF. And you can see they're a little bit different in terms of the numbers, different ETF provider, different companies. You can see they're on the right. Some of these might be a little bit less well known to us as Australians. But yeah, you can always jump in and have a look at what that holds and research some of those US-based companies as well. Okay, so let's have a look. We'll go through some of the advantages of investing in this sector, and then we'll also take a look at the risks. It's important to know the risks as well when you're investing in a certain sector, but starting off with some of the advantages. So the materials sector tends to perform well during boom economic cycles. So when the economy is expanding, there's more demand for basic materials because wanting to build more houses, more cars, more electronics and other products. So this demand then pushes up the price of materials, and therefore often the performance of the stocks involved in that material production. Growth in developing countries boosts material demand. So when we think about countries like China and India, these developing countries that are really expanding their economies and I guess improving quality of life for people as well, they need materials to build, like I said, build those new houses, new cars, phones, electronics. There's all of these things that come along with a developing economy. And that also supports the long-term prospects of materials stocks as we need to build more things. They often have reliable cash flow. So since materials are necessary to build any product, they're not going to go to zero in terms of demand. Now, the demand for certain materials may shift as we look more towards things like renewables, as the geopolitical climate shifts, as prices change. But in terms of materials themselves, the demand's never going to go to zero. We always need to build new things. And so especially for essential materials that are used in healthcare, in food, in power, the demand's never going to go to zero in terms of demand. And dividend yields. So materials stocks are quite often known for sharing their profits back to shareholders. So they do tend to pay higher average dividends than other sectors. And we saw that, in terms of Fortescue as an example, a materials company that's been around for a really long time, it's quite profitable, and it often shares those profits back with its stockholders as well. Now, just to cover off the risks. So risks of investing in materials can include that they may lose value during economic downturns. And when we look at, they call it economic cycles or cyclical demand, it can mean that when the economy goes into recession, I guess people kind of pull back on their spending. So material prices can tend to fall, and governments often pull back on their spending as well. That can hurt the stock performance of some of these companies as demand or as governments and companies and people pull back on their production of certain end products, which obviously require materials to create those. Less exciting companies. Now, this is definitely not true for the sector as a whole. We know there's some really, really exciting stuff when it comes to technologies and materials and mining, the likes of electric vehicles, for example. But some of the, I guess, more traditional commodities like gold, for example, may be seen as less exciting, less high growth. So yeah, again, just important to understand your own goals when it comes to investing. So sometimes there can be less opportunity for rapid share appreciation versus other sectors like technology. But in saying that, we're really seeing materials be a large component of new technologies that are coming up. So depends on the material there. High cost activities reduce profit margins. Now, again, not a blanket statement, but when we think about mining and how many resources it takes to set up a new mine, the equipment required to mine, human capital, construction materials, even huge companies with billions of dollars in revenue that actually may not lead to huge profits because the cost base is quite high. So when you might compare it to something like a software company where once they've kind of got their software, they can sell that. Obviously, there's costs involved, but they can sell that over and over again. When we think about mining, it's very resource intensive to mine metals and materials. And the last one there is that they are vulnerable to international supply chain issues. So we've got a very global economy now. Materials and mining stocks, as we went through, they've got production in multiple countries, they're importing, they're exporting. So they are very sensitive to the global economy as well as the local economy. And so as a result, they're more vulnerable to international supply chain problems, as well as political issues like tariffs. So if there is tensions between two countries, we know throughout the COVID pandemic that there were issues with the international supply chain that they are very global companies, so they can be vulnerable to what happens in the international supply chain. And that comes to the end of the sector-specific content for today. But just a reminder of what you get when you invest with Superhero. This is a Superhero webinar. Wouldn't be doing my job without it. So when you invest with Superhero, you can invest in Aussie and US shares. So all the stocks we went through today, the Australian ETF, the US ETF, and also direct US shares if you want to. Whether that be in the materials sector or otherwise, you can invest in all of those with Superhero. We've got kind of a new system on our invest tab, so definitely check it out where you can kind of scroll through and see different categories. As I said, we've got one there specifically for materials, which has both Aussie and US companies in it. And yeah, look, I won't go through in detail all of our other features, but you can see them on the screen there. Some of the benefits of investing with Superhero. All right, I'll stop sharing my screen now and we'll take a look at if there's a few questions. All right. Okay, question from Jerry on where can we find more resources about ASX ETFs? So Jerry, I showed you that market index screen before. Market Index is a great website to compare not only stocks, but also ETFs. So they've actually got an ASX ETFs page, and you can go in and you can actually select sector-specific ETFs as well. So find the Market Index ETFs page, and you'll be able to compare resources-specific ETFs across a number of different providers. Alternatively, if you already kind of know of a provider, you can go onto the provider's website and have a look at the ETFs they provide. But if you're wanting to look at all of the ETFs listed on the ASX that deal with the materials sector or any other sector, Market Index, and also the ASX website. So the ASX website also has a list of all of the ETF products available in Australia. And there's similar resources for the US. I always find a Google search normally also helps me out if I'm looking to what are all the resources, ETFs available on the ASX. You'll normally find a pretty good resource come up. Okay. I've got a question on... Sorry, guys, I'm just scrolling through. How does ETF management fees work? Yeah, so I'll cover that off again. An ETF management fee is a fee essentially. So an ETF company is there managing that investment product. And so they charge a fee for that. The fees range depending on the product, depending on how actively that ETF is managed, and depending on the provider as well. And the way that management fee works is it's not like a trading or brokerage fee where you'll pay that additional when you invest. It is a fee that is taken out, and excuse me if I'm butchering this, but almost netted from the performance of the ETF. So it's not a fee that you'll see come out separately, but it is a fee that will be netted from the performance. So yeah, just keep that in mind, I guess, when you're looking at the performance of the ETF, that there is that percentage fee taken from the performance every year. And if you want more information, feel free to go to the ETF provider's website and you'll be able to see the management fee and some more information there as well. I've got a question on the outlook for the sector in the next 2 years. Unfortunately, I can't provide any financial advice on what's going to happen. The best thing I can tell you to do is just make sure you do your own research, understand what's happening in the world, understand the past of what has led to certain stocks and materials either increasing in demand, and understand what the trends are for the next 5 years, whether that's on a particular material or on the economy. Oh, sorry, my light's gone off. On the economy as a whole, we've got these fancy lights at work that turn off when you don't move for a while. But yeah, just have a look at the trends happening in the sector and in the world. But yeah, unfortunately, can't give an outlook on the stock market itself. Okay. some of the stocks touched upon in the webinar had triple-digit growth over a 5-year period. Is this normal for the sector? Again, past performance is not indicative of future performance. All I can say to you there is, if you had a look on the slide where we looked at the prices for the actual materials themselves, you can see there that there's been a huge demand uplift in the past couple of years for certain materials. So again, I can't tell you what's going to happen in the future, but what we've seen in the past couple of years is a huge and reasonably sudden demand increase in certain materials. And so that has led to increases in the price of those materials, and therefore the companies that have been involved in exploration of those materials have increased. Now, you'll see a huge variance when it comes to that performance. So it's definitely not that the whole sector has had triple-digit growth. Again, if you look at that ASX, the IMJ index, go on market index or on Superhero, have a look at that index or ETFs that kind of track that index. You'll see that the performance of the sector as a whole hasn't necessarily had that extreme growth, that within it you've got companies that have been more stable, that deal in commodities that have been around and being used for a long time, like iron ore, and then you've also seen kind of the explosion of certain materials as well. So again, always important to look behind just a company or a sector and actually look at the materials themselves and what their use cases are, I'd say. Okay, like ETFs, do we have any index funds for this sector? So, Vinay, they're not the same thing, but they are in a way. So an index fund, so some ETFs are index funds. And what that means is that some ETFs, they are completely focused on tracking an index. So that index, the XMJ or the Australian Resources Index, that is an index, and there are ETFs that track that index. I hope that helps you in saying that, yes, there are index funds that track for example, the ASX 200 resources sector. And what that means is companies in the ASX 200, or the largest 200 companies listed on the ASX by market cap, it focuses specifically on the companies in that index that are in the materials sector. Hope that answers your question. All right, I think we're going to leave it there for today. We've gone for 45 minutes. I hope we were able to answer most of your questions. If you do have any further questions that weren't answered today, or more account-specific questions, feel free to pop onto our website, and we've got the team on live chat there that are available to answer any account-specific questions that you might have, or any further questions as well. And this will be up on YouTube, so you can come back and pause and have a look at some of those graphs and charts more in detail if you'd like to. Thank you so much for joining, everyone, and enjoy the rest of your day.